Welcome everyone to Trust the Plan. I'm Nick.
And I'm Jim.
And Jim, this is not the Feel Good edition.
No, that was weeks ago.
That was last week.
Yeah.
But we had a nice weekend here. My middle kid, Jack, he's in 9th grade now, so he had his first homecoming dance.
Oh, man. Homecoming for Jack to get all spruced up.
Oh, yeah.
Tie on him and everything.
Yeah, he had a tie and
Nice.
got him a suit,
Yeah.
first official suit,
Okay.
And he didn't do the group thing. He had a traditional date, and he can't drive, right? So I had to go pick her up and drop her off. Yeah. So that was fun. I was trying to be the cool dad, right? But not overbearing. So, all right. Well, let's get into today's topic. Talk about Ferraris.
Okay.
I'm more of a Lamborghini guy.
Yeah.
But I like Ferraris too.
It could do in a pinch.
Yeah, here we go. So, found this chart on Twitter, and it really stood out because I had been hearing about Ferrari and how successful they've been lately. But look at the stock, the dark blue line here of Ferrari. And if you're listening on the pod, that's great, but check us out on YouTube because you get to see the charts. So, since 2019, the Ferrari stock has been doing really well. And since the end of 22, it's just been on fire. And this is compared to Dollar General because it's done much poorly over the same period of time. And Dollar General kind of being an opposite type of business, right?
Yeah, they feel like polar opposites, right? A high-end luxury item versus kind of a low-end, staple.
Right. But what's also interesting is that through the end of 21, 22, it was similar, right? They're kind of just moving upward and to the right together. And only recently did the charts really go in different directions. Mm-hmm. So what can we make of this? When we were preparing, what did you say? The rich get richer, right?
Yeah. I mean, that's the first thought, right? Is, we've kind of gone through a period where people feel like their dollar's not going as far. Inflation's caught up to them. Everything costs more. It's harder to make ends meet. But it's interesting to look at that and see that, the buyer of a Ferrari hasn't been hampered by it. It hasn't been affected by it, right? The stock price is showing that they're doing well.
Yeah, I kind of look at this and think, yeah, the rich get richer. But I think, well, why right now, right? Mm-hmm. Why now? And to me, it's all about the policies coming out of COVID. And I realize that this is a little bit of a delayed reaction if my thesis is right. Mm-hmm. Why didn't that start in March of 20? Well, good question. But through the government policies where we've seen all the inflation, the Fed cutting rates to zero for many years, and both administrations handing out money like it's candy, right? Mm-hmm. And the PPP loans and all the other stuff. And so you look at the deficits. We put on $10 trillion to the debt during this period, and all that money, went into our pockets, right? Mm-hmm. So whether you are just putting that money in the bank or whether you are a beneficiary of owning assets, mm-hmm. you got money, okay? But I would argue that the people who benefited the most were the asset owners, mm-hmm. okay? So if you own stocks, if you own real estate, they're all worth way more now.
Mm-hmm. Yeah, I mean, that's one of the big effects inflation has on assets is it makes the assets worth more money. So if you own assets, houses, cars, property, things like that, they appreciated significantly during that period.
Yeah. And if you don't own assets, if you're just paycheck to paycheck, just getting by, the inflation did nothing but hurt you because the cost of a new car is, up double or whatever. Mm-hmm. I'm not sure the percentage, but a car is up. Your food is up. Price of gas is up. So wherever you turn, you're paying more, mm-hmm. and you're not necessarily keeping up with that with your income growth. So, and I know, and I don't have the stats here, but the wage growth has not kept up with inflation over the last 3 years. Mm-hmm. So on one side, you're benefiting from this inflation because your assets are worth way more. On the other side, you're just, hand to mouth, even worse because your wages are not keeping up with the cost and there's no assets to back you up.
Yeah. The other takeaway when you look at that is you would think going through a period like that, though, where money's tighter, your money's not going as far, you would think Dollar General would be a beneficiary of that, right? You would think that individuals would try to stretch their money and go to a store like that, and it doesn't pan out, at least in stock price performance.
Yep. So to your point, you wouldn't expect Dollar General to be suffering in this environment because they are thought of as recession-proof. So if you're think about it, if you're struggling, right? And I do this too. CVS and the Hallmark cards, forget it. Okay, I'll never do it ever. They're like $6.
Yes, they are.
So I like to go to Dollar Tree and buy cards for 99 cents or $1.25. And to me, the quality of the card is just as good, right?
The message is just as solid. It's all good.
Yeah, just maybe a little less sparkly, but
less glitter. But that's not.
I'm not here for the glitter, okay? So I can buy a card for $1 versus $6. So you think of Dollar General as recession-proof because if I'm struggling, I don't have extra income, I can go there. My dollar goes, pretty far. Okay, so recession-proof. Why, right? If people are struggling, why would the stock be in the tank?
Right.
You'd expect their sales to be up.
Yeah.
So this is a mystery, right? So some people are saying, well, maybe these dollar stores, and it's all the dollar stores.
Yeah.
The chart looks like this. So is it mismanagement if they're all in the same boat? Probably not. Okay. Or maybe is the market just punishing them because they're out of favor right now? That could be it. Okay. Like maybe their fundamentals are still decent and the stock is just out of favor. That happens a lot. Okay. Or maybe things are way worse for these lower end consumers than anyone realizes.
Yeah.
And you don't realize it because the markets are up, because house prices are still, they're up. But, the jobs numbers, jobs are gaining. But if you look under the surface there, more people have part-time jobs. Maybe they're like doing 2 or 3 part-time jobs, trying to keep it together with sticks and tape.
Yeah.
Kind of like the Michigan offense, just kind of just trying to keep it together with Scotch tape. Yeah. But that's what I worry about here is that the lower end consumer is really, really struggling, and that's why they're in the tank.
Yeah, I think that's a good observation, and it's probably reality. Maybe they still are going to Dollar General, but they're having to pare down what they're buying, and they're buying much less than they normally would even.
That's that could be it as well. Like, you just have less money to spend there.
Yeah.
Right? You're still going there because it's the best value, but you just are not spending as much as you can't.
Right.
Okay, so Ferrari. Yeah, this is not a recommendation. Okay.
No.
I'm not recommending that you buy a Ferrari or buy Ferrari stock. To be clear. Okay. We should probably distinguish
that's an
that.
important disclaimer.
Yeah. All right. So please subscribe. Please share with friends if you're liking this content. And if you'd like a second opinion with your financial plan or a second opinion on what you're doing with your investments, check us out at peakwm.com.